Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's talk municipal bonds. Why? Because it's Friday, and that's what we do. Eric Kazatsky joins us. He's a managing director and client portfolio manager at Mackay Municipal Managers, based there in Princeton, New Jersey, home of Hoagie Haven, the best hoagies anywhere. And I've had them everywhere. Eric, thanks so much for joining us here. What's the story here in 2026 in munis? I'm hearing more and more portfolio managers, fixed income portfolio managers and strategists come into this studio and talk about munis, and they're preaching to the choir.
Yeah.
What's the outlook for 26?
I mean, we're probably just as excited about anyone else that you're talking to, right? Except for the fact that our returns are probably better. I just say that kind of jokingly. Look, I mean, at the end of the day, we're coming off a very strong back half of 2025, and it's provided great tailwinds coming into this year. And just to put some context and numbers around it, munis are up about 153 basis points this year. To give you a sense of what that means historically, 20-year average for muni returns, just beta index returns, 389 basis points. So we've delivered about 40% of 20-year historical returns in the first month and a half. Very strong.
Nice.
So what's really working then in terms of the muni performance? What do we credit it to?
Couple things, right? So last year, our theme when we came out with our insights was a return to normalcy. And what that really could mean, if you're sort of looking at the market from a structural standpoint, is we had a return to a normal shaped yield curve. Beginning of last year, yield curve very flat and inverted, never a great recipe for returns or active management. Now we have a normal shaped yield curve. You're getting paid for duration. You're getting paid for credit risk. So all things that should be happening in a muni market, and we're loving to see that. The other things that are working right now is that what typically happens with munis, retail-driven market, is that retail buyers chase returns, right? So you had institutional money come back into the space last summer, helped amplify better returns down the second half of 2025. Retail came back in and is chasing those returns, and it really has created a nice flywheel effect for the asset class.
Talk to us about new issuance market, Eric. I understand in the muni bond market, a ton of issuance in 24, another record year in 25. What's the expectations for 26?
Yeah, I mean, I think plus or minus 10 to 15% is what we're hearing from the sell side strategists who come through our office. We had $600 billion last year, really fantastic if you sort of look at it from a historical standpoint. And, you know, at the end of the day, we want to see growth in the asset class, right? It shows maturation of the buyer base. It shows more of an acceptance of non-traditional buyers coming in. And I think the story is, like, a lot of people were like, oh, well, you had so much supply last year, it was a headwind to returns. I'd argue and say, no, right? All of that issue was well, absorbed into the market. Everything was well oversubscribed. So it really does show that, the muni market is poised for further growth.
When you look at the overall environment, we had the One Big Beautiful Bill passed last year, and a lot of people are seeing good things for the economy this year, in part because of some of the provisions in that legislation. What does that mean for the muni market? Do people tend to use the money that they get back in their pockets to invest in munis?
Yeah, I mean, look, there are going to be more money coming back this tax return season because of increases in SALT and other provisions that are going to help, folks on the one side of the AGI ledger. I would argue that most people who are buying municipals are going to be in that very high net worth to ultra high net worth category. So they sort of phase out from a lot of the provisions that are going to benefit others. Look, on the margin, though, what will happen is that if they are still subject to those phase outs, SALT in particular, it just means that the value for California munis or New Jersey munis or New York munis are going to stay very, very strong and help with total returns this year.
What's the next big issue you're looking for here? Is there a big issue that's going to come to the market that could well be a real milestone for the year?
I don't know if it's a big issue, but the question we're getting all the time, Paul, is how are all these AI data center buildouts really going to impact the muni market? We had the strategist from Barclays in here at the end of last year, and they were talking about close to $2 trillion in issuance, mostly on the corporate side, to really fully build out data centers across the U.S. And so you could imagine some of that might trickle into the muni market. We're not sure how it really fits in. I would imagine it's probably sort of like a P3, public-private partnership type effort to bring those online, but it should be interesting to see if that really sort of helps on the margin with further issuance.
All right. Thank you so much, Eric. Really appreciate you joining us for our weekly Muni segment here on Bloomberg Radio. Eric Kazatsky, we know him well. He is Managing Director and Client Portfolio Manager at Mackay Municipal Managers with our Munis in Focus.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.